Equities in Asia dropped at the start of the week as investors digested the potential impact of recent spikes in coronavirus cases and a threat of a second wave of the pandemic. A spike of coronavirus cases in China led to a lockdown across 10 districts in the capital. Cases were also rising in the U.S., leading the New York governor to threaten to reverse the phased reopening of the state's economy. By the way, Texas and North Carolina reported a record number of virus-related hospitalizations on Saturday. On the data front, China's industrial production for May rose 4.4% year over year, less than expectations of a 5% increase by analysts. Retail sales declined 2.8% year over year last month, worse than expectations of a 2% decrease. As a result, Japan's Nikkei 225 dropped 3.47%, South Korea's Kospi plunged 4.76%, China's Shanghai Composite was down 1.02%, and Hong Kong's Hang Seng Index declined 2.16%. Meanwhile, the S&P ASX 200 in Australia fell 2.19%, while overall the MSCI Asia ex-Japan Index dropped 2.21%. In Europe, stocks finished the session in the red on Monday, amid the lingering concerns over a resurgence of the coronavirus in Asia and the US as lockdowns are eased. However, the selling pressure had eased by the end of the day, with the Pan-European Stoxx 600 recovering the majority of its steep earlier losses and finished just 0.2% lower. Germany's DAX fell around 0.3%, France's CAC 40 ended the session 0.4% lower, and the UK's FTSE 100 closed down around 0.8%. In the US, equities erased losses and turned higher after the Federal Reserve announced it would begin individual corporate bond purchases. The regulator will begin taking in bonds through its secondary market corporate credit facility on Tuesday. The central bank also opened its Main Street lending program and is encouraging banks to make loans to eligible small and medium-sized businesses. On the data front, manufacturing in New York region recovered marginally in June, and the New York Federal Reserve's Empire State Manufacturing Survey came in at minus 0.2, a steep improvement over May's minus 48.5 and far above minus 78.5 reported in April. At the closing bell, the Dow Jones Industrial Average rose 0.62%, the S&P 500 gained 0.83%, and the Nasdaq Composite added 1.43%. In currencies, the euro to dollar rate rose decently on Monday after some indecisive consolidation earlier in the day. The euro was boosted by a better risk sentiment following the announcement by the Federal Reserve. As a result, the pair climbed above 1.13 and finished around the upper end of the range, preserving the upside impetus earlier on Tuesday. Still, the tone surrounding the common currency remains neutral as long as the prices stay below the 1.14 barrier. The US dollar to yen rate finished unchanged after the intraday volatility. The pair's bullish attempts were capped by the 107.55 area, while on the downside, the greenback managed to hold above the 107 handle, suggesting the downside pressure has been easing since the sell-off witnessed last week amid risk-off trends. Meanwhile, oil prices reversed earlier losses and saw decent intraday gains on Monday. Brent crude climbed back above the 100 DMA and finished just below the $40 handle that could be challenged on Tuesday if risk sentiment continues to improve. Earlier in the day, oil futures slid on lingering concerns over the threat to fuel demand from the resurgence of new coronavirus infections around the world. In Asia, stocks jumped on Tuesday as investors reacted to recent announcements by central banks. In the Reserve Bank of Australia's minutes of its June monetary policy meeting, the central bank's board said it was likely that this fiscal and monetary support would be required for some time. Meanwhile, the Bank of Japan said the country's economy is likely to remain in a severe situation for the time being due to the impact of COVID-19 at home and abroad, although economic activity is expected to resume gradually. The MSCI Asia ex-Japan Index gained nearly 3%. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data. Good luck trading.